I think we're going to see gold rally up to about 26 to 2,700 based on the daily chart over the past, really the low that was set in February. That shorter term daily chart is pointing to 2650. If we were to zoom back and look at the monthly charts, we're actually, those monthly charts that took many, many years to unfold is actually pointing to 2650 as well. So I think there's pretty good upside. I think there's, $300 upside in gold, which is not a bad move for gold. Yeah, silver's coming to life as well. I think based on the chart patterns, it's pointing to about $34 an ounce for silver. So there's a nice potential move there, percentage wise, a lot bigger for silver than it is for gold. And I think we're going to see that move higher. Of course, if that happens, we'll most likely see the miners move as well.
ChrisVermeulen, chief market strategist at the Technical Traders, provides a bullish outlook for gold and silver, suggesting significant upward movements for both metals based on daily and monthly chart patterns. Vermeulen anticipates that gold prices could rally to $2,650 to $2,700. Currently, gold trades in a tight range above $2,400, consolidating previous losses. Traders await the minutes of the U.S. Federal Reserve's May policy meeting for fresh trading impetus. In the silver market, prices hold initial support at over $31 an ounce. According to one major bank, silver can move higher as momentum picks up. Silver's recent outperformance has pushed the gold-silver ratio to 75 points, its lowest level since December 2022. Analysts note that silver is attracting new attention as investors seek to hedge against persistently elevated inflation. Vermeulen predicts silver could rise to $34 per ounce, representing a more significant percentage gain than gold, indicating a robust opportunity for silver investors. As gold and silver prices rise, mining stocks are also expected to perform well, particularly in the late stages of a bull market for equities, where the market currently stands. Despite a recent dip, with gold trading lower by over 1% in the $2,380 due to shifts in interest rate outlooks globally, the long-term prospects remain strong. Vermeulen also warns that the banking sector, particularly regional banks, may face severe challenges, potentially triggering market shifts and impacting real estate. In this context, precious metals, especially gold, are considered the safest investments due to their stability during downturns. Join us as we delve into Michael Oliver's insights. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
I think we're going to see gold rally up to about 26 to 2,700 based on the daily chart over the past, really the low that was set in February. That shorter term daily chart is pointing to 2650. If we were to zoom back and look at the monthly charts, we're actually, those monthly charts that took many, many years to unfold is actually pointing to 2650 as well. So there's two totally different cycles, two different time frames and chart patterns that are pointing to that price. The pattern for gold is very bullish. It's starting to find a little bit of a bid, as you and I are talking right now, starting to move higher. So I think there's pretty good upside. I think there's $300 upside in gold, which is not a bad move for gold.
Oh yeah. And what about for silver?
Yeah, silver's coming to life as well. I think based on the chart patterns, it's pointing to about $34 an ounce for silver. So there's a nice potential move there, percentage wise, a lot bigger for silver than it is for gold. And I think we're going to see that move higher. Of course, if that happens, we'll most likely see the miners move as well. And this is the time that we usually see them shine. When you look at the overall cycles in the market, late stages of a bull market phase for the equities markets in general, which I believe were very late stages. I think we're closer to a recession. This is when gold, silver miners come to life. Same with energy. You look at XLE, like the energy ETF, it's one of the top performing. It's been screaming higher. And that's what comes to life, gold and energy. And that's what we're seeing. So this is definitely a warning sign. It's good for metals, but it's a warning sign for the economy, for businesses, for the overall stock market. Well, definitely the banking sector and the regional banks are going to get hit real hard. Obviously, that's going to spark a ton of fear.
Right. A lot of selling.
It's going to a bunch of selling across the board. It's going to spark all kinds of people worrying about real estate. It could be a catalyst that really turns the tide. And it's usually there's some big piece of data that comes out like that.
Right.
Typically when the technical chart's set up for a big major move. And the fact that the SP 500 hit a major top, and then had a very sharp pullback in the past couple of weeks, and then potentially seeing a bank crisis. You never know. They could, this could be kind of the top. So we just have to wait and see. But the markets right now carry a ton of risk. I think the safest, most defensive play to be in is most likely precious metal space. I like gold the most because it's slower, it's consistent, it can actually keep rallying even if the stock market goes down. Silver and
Any gold mining?
miners,
Yeah, any gold or silver mining companies that you're into?
not individual ones. I mean,
Okay.
I have looked into, like, I generally used to like the royalty paying ones, like Royal
Yeah,
Gold
yeah.
type thing.
I've heard of that. A lot of people would always go into the royalties.
Well, you don't really have any. I mean, I don't know the space very well, but I mean, yeah, you just lease out land and you get it.
Yeah, yeah.
Everybody else takes all the risk, spends all the money. You get a
Yeah,
chunk
you're
of the
just
gold that
loaning.
they,
Yeah, yeah. You're loaning them the money and the
yeah, it's like you watch,
finances.
if you ever watch Gold Rush, the show, which I love, it's like the people who make, most of the people who make the money are the ones leasing out the big equipment
Yeah, yeah,
and servicing equipment.
yeah. Which is a great business to be in, I bet. Royalties.
Oh yeah, I think
Yeah.
that's the way to go. Who doesn't? It's like having a licensing agreement, right? You don't have to do anything. They take the risk, you just get paid, they mine your property.
Vermeulen observes that the current market sentiment is cautious. The S&P 500 has reached a critical resistance point, creating uncertainty about whether the market will continue to rise or enter a significant correction phase. This sentiment was evident on Wednesday, as U.S. stocks fell following the release of the Federal Reserve's most recent meeting minutes. Investors await quarterly results from AI chipmaker NVIDIA, which are due after the closing bell. Stocks struggled for direction throughout the session, but weakened after the minutes revealed that U.S. central bank officials still believe price pressures would ease, albeit slowly. This cautious outlook comes after 3 months of persistent inflation data before the early May meeting, though there were signs of cooling price pressures afterward. Meanwhile, the commodity market has outperformed the global stock market by a large margin, with commodities like silver, copper, and gold delivering stellar returns this year. Vermeulen notes that downturns and increasing risks in the banking sector enhance the appeal of precious metals. Gold, known for its historical stability, is particularly favored, while silver offers the potential for higher percentage gains. Silver prices climbed above the $31 mark this week, hitting new all-time highs. In addition, gold prices have been printing new highs every month and are now eyeing the $2,500 price target. Let's get back to the interview.
I'm concerned about the economy. I'm concerned about a lot of people. When things get tough, I mean, the majority of people suffer.
Yeah.
And most people don't see it coming. They don't understand the cycles. They don't understand these things that are unfolding. So I think we're going into a resource heavy next decade. I think it'll be a big move in resources and they're going to become very valuable. Yeah. So asset revesting, it's kind of I would say it's like a third style of investing. So you've got the buy and hold people who do nothing. They ride out these roller coasters, these cycles, and it takes a lifetime to retire because the
Right.
buy and hold is very low average returns, takes time to make money. And then you got active traders. It's proven the more you trade, the more you lose on average. Active trading is very, very difficult. So asset revesting is simply focusing on owning one asset class at a time with our portfolio. So
Hmm.
we either own the stock indexes or we own bonds or we own a currency like the US dollar index. And the general rule is we always want to be in the stock market because it's the most volatile if
Right.
it's trending higher. If it's not, we move to a different asset. Simply put, the stock market is like the ocean. When we're in a bull market, the tide is going up, it lifts all boats, it lifts pretty
Right.
much all stocks. When the stock market is in a bear market, we're in a recession, pretty much all stocks go down and most assets as well. Even commodities can go down. So when something's going down, my whole theory is we don't want to own stocks if they're going down. Let's move to something else. It could be gold, could be bonds, could be the currency. And so that's what we do is just move our money to the strongest asset at any given time, the asset class. And as soon
What's
as
the
it shows
strongest
signs,
asset right now, in your opinion?
right now, we've moved out of the market just as of about maybe 3 weeks ago or so. So we're sitting in cash right now, waiting to see if the stock market
Smart.
is just having a pullback and is going to start one more push maybe into November or
Smart.
later with the elections, or if this is going to be the start of a downward move. So we literally stepped to the sidelines, right up at the level that we're at pretty much right now, just because everything is telling us this market is either going to have a very big correction right here, or it is going to have another leg up. And as soon as that new leg up is confirmed, we can get long again. But we don't want to be holding the basket of stocks if they're going down. And what's really interesting is the SP 500, based on the chart patterns, you go back quite a ways, has just hit 100% measured move. And then
Wow.
we saw that big pullback last month, in the past month. So it is generally my whole thought process. If you know what the SP 500 index is doing, going up or down or sideways, then that tells us where we deploy our capital. Is it
And
in
now
equities or
and
something
it's
else?
going down, correct?
Right now, the SP 500 is still in a strong uptrend
Okay.
from a long-term standpoint, but it's at resistance. This could be a major top. We have to wait. Where we don't want to hold at this point because I believe the markets could drop fairly significantly.
Considering the market's potential reaction to signals about interest rate changes and the inflation outlook from the Federal Reserve, how do you think the upcoming Federal Reserve policy meeting minutes will impact the future trading of precious metals like gold and silver? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.